Hi, and welcome to the Stockscores Market Minutes for August 24th, 2015. This week I want to talk about uptrend reversals, something that's timely as we will see in the charts ahead. The end of an upward trend tends to follow three stages. First is a break of that long-term upward trend line, and I like to use the 3-year weekly chart for this. We then look for the formation of a falling top. Now we can actually see a falling top before the break of the upward trend line, but typically it comes after. And then finally, we have a breakdown from a falling top. So these three things tend to happen when a long-term upward trend is broken. And we'll get to a chart in a moment that shows that. First, I want to look at the intraday chart going back a month for the S&P 500 ETF, SPY. We've been talking about this pennant pattern for a number of weeks and how the volatility is getting tighter and tighter. And what I said is as that volatility gets tighter, we eventually come to a reckoning point. And in this case, the market broke down on Thursday, which predicated that huge move to the downside this week. We've been talking about this for a while, how we were likely to see a strong directional move soon. Now, we actually had a breakdown last Wednesday, or the previous Wednesday, I guess, and that one failed, but that gave us a little clue that this was coming. But on Thursday, we had the strong break through support on heavier than normal volume, and then, of course, the big drop on the Dow and all the markets on Friday. Now, here is that long-term chart, and here you can see that the long-term green upward trend line has been broken in a very profound way. You can see the length of that candle is quite long, and so that indicates that the long-term trend has been broken, and that is stage one of a upward trend reversal. Now, we could argue that there is a falling top on this chart. The highs made in July are slightly lower than the highs made in, I guess that would be May. However, it's very slight. I'm not sure that that's really what we want to see, but either way, there's a pretty strong signal here that the top has been made for the market, and we are going to go into a longer-term downward trend. Now, what typically happens after a big breakdown like this is you get people bargain hunting. We'll probably see that early next week. Stocks are pretty oversold. You'll get people coming in and buying stocks, and we could see 2 or 3 weeks of upward price action before a rollover, perhaps in October. And so I don't want to call it like the market's destined to be lower week after week after week from here. I mean, it could happen, but probably not. What will probably happen is we'll get a little sucker rally, the formation of a falling top, a rollover, and a confirmation that the upward trend has been broken. So although I do think that looking out 6 months will be lower, looking out 3 or 4 weeks, maybe not. We may actually be higher from here. Here's a chart of the Russell 2000, and I've tried to draw the upward trend as liberally as I could, just to show that we're right at that upward trend line. You could argue that we broke that one as well, but again, I've given it the benefit of the doubt, and no doubt, however, that we have some downward price action over the last few months. Again, a little oversold on the small caps, probably get a little bounce back in the short term, but this market is looking uglier. Not as bad, however, as the S&P 500 because the upward trend line hasn't been broken. Here's a chart of the TSX 60 going back 1 month on the 60-minute interval, and you can see that the pace of the downward trend has gotten steeper. We talked in last week's market minutes about this little pennant pattern that was forming, and we broke through that here, and then just every morning on the open, big down move. It's been that way morning after morning, and so it looks to me like we're still in a bearish trend here. Again, pretty oversold. Why do I say oversold? If I was to draw a line across these tops, and I draw this red line here, and I continue that line out, the fact that we're so far down and away from that red line means that the market is oversold, and it means that there's likely to be a short-term bounce back, but that doesn't mean that the trend will reverse. It can be, up for 3 or 4 days and then continue in the downward cycle. So that's what I mean when I talk about oversold. Here's the weekly chart of the TSX 60, kind of plowed through that support this week. Again, I think probably bounces back in the short term, but ultimately we are destined lower. The TSX really needs some bounce or some strength in the oil market, and the oil market was really ugly again this week. And so much of the TSX depends on oil. 12% of the TSX 60 is energy stocks, but so many other businesses relate to energy. The banks are going to be affected by the weakness in energy. People start losing jobs. Other industries in Canada are going to be affected by that. Chart of the TSX Venture, as I've said many times in the last little while, this is an ugly chart, and it just keeps getting uglier. And I think in general you want to avoid this. The odd stock outside of the commodity sectors in the TSX Venture may be worth considering, but for the most part, the TSX Venture should be avoided. Treasuries made that clear break through the flag or the downward trend line that I've drawn in red, and it continues to go higher. That means interest rates are going lower. That sort of indicates that maybe the Fed won't raise rates, or at least the market doesn't think the Fed is going to raise rates as soon as September. But ultimately, that's also sort of a rush for cover. People moving out of stocks looking for a place to hide, they're moving into the safety of treasuries. U.S. dollar actually down this week, and that's interesting because it went down and oil went down, and they tend to move in opposite directions. But this could be supportive for oil next week. Not to say that you should be rushing out to buy oil just yet. I mean, it's still a very ugly chart. We'll discuss that in a minute. But weakness in the U.S. dollar usually helps oil get a bit of strength. Gold did find a bit of strength, and certainly there were some good tradable moves in the gold stocks in the last week. There was some gold names that are up 20-30% for the week. So as a trader, as a swing trader, you could take advantage of that. And I talked about that in my daily newsletter. But in the big picture, gold still remains in a downward sloping channel and really a long-term ugly chart. So I do think we could get another solid week of upside in gold, and it'll really depend upon what the stock market does. But that's interesting how gold has been doing well for the last couple of weeks. Something for traders, but really not something for anyone else to consider. Oil, there you can see just the steep downward move in oil, oversold, due for a bounce, but no sign of a bounce yet. And I will be looking for that bounce myself, but looking for it on the 30-minute intraday chart of oil or one of the energy ETFs. You don't want to look for it on the longer term interval, but if you want to trade a bounce in oil, look for some strength to come in, a break from a rising bottom on the intraday chart of energy or the energy ETFs. There you can see volatility spiking, obviously fear picking up this week, up about 25-30% for the week. And that, of course, reflects the weakness in stocks. All right, so I'm lowering my rating to bearish, both short and long term on U.S. stocks. Again, short term, I wouldn't be surprised if we see some strength next week, but my long term outlook is bearish, and the trend on the short term remains bearish. That could change quickly. Canadian stocks bearish in both time frames. Gold bearish, long-term neutral. Short-term, we are seeing a little bit of a trader's rally in gold. Oil bearish on both time frames, but oversold. The long-term upward trend for U.S. stocks has been broken. Stocks go into next week oversold, which makes a short-term bounce likely, but we should be cautious with those longer-term holds in the stock market because a bounce here may be a sucker rally before further weakness. It wouldn't surprise me if we're up for 2 or 3 weeks and then roll over later in September, maybe early October. Gold will come into resistance soon. Watch oil for signs of a tradable bounce back. But again, that's for the nimble swing or day trader, not for someone who's not going to watch the market very closely. Well, that has been the Stockscores Market Minutes for August 24th, 2015. Have a great week in the market and trade well.